It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, June 4th, 2015. A special pre-non-farm payroll newsletter in store for you guys this evening. That's right, we got some big news just around 18 hours away here as I film this video on Thursday evening. Before we jump into tonight's charts and get ready for tomorrow's pretty much the biggest news report we get of the month, I want to remind you guys, everything I'm talking about tonight in the video, I teach to all of our students here at School of Trade. Check out SchoolOfTrade.com and you can join our free trial and learn more about what is involved with membership. Also, there are 3 reasons why you should be watching this video on our trading blog here at SidewaysMarkets.com. First of all, you can download all the charts right below the video tonight. There's a link right below the video on our trading blog allowing you to download and use all of these charts in your trading session tomorrow. So you'll have those ready for you tomorrow. And of course, upper left-hand corner, you got a free pass. If you're not a member of School of Trade and you'd like to see what all the talk is all about, I got a free pass for you guys. Come out and test drive our live trade room as a guest. If you're not a member of School of Trade, you definitely want to take me up on that offer of the free pass, upper left-hand corner and lower left-hand corner, right above my ugly mug. You'll see a spot for your name and your email address to register for our nightly newsletter mailing list. Now, download the charts, register for the mailing list, grab your free pass. If you grab the free pass or if you register for the mailing list, please be aware I'm going to send you a verification email, so make sure you check your inbox so you can verify your email and get that newsletter mailing list started for you. Alrighty, ready to rock and roll? Tomorrow morning, 8:30 a.m., we have the non-farm payroll report here in the U.S., possibly the biggest news we get here as traders. Everyone's eyes are going to be on that non-farm payrolls report tomorrow morning. So, most important thing we could do getting ready for tomorrow is to be open-minded and be ready for pretty much everything. The bottom line is, around 8:30 tomorrow morning, you're going to see what usually is a very volatile environment, a little bit too volatile to be traded safely. What I mean by that is liquidity drops ahead of it. There aren't a lot of big money players in the market ahead of this major news, because when this news comes out, it has the tendency to catch people off guard and really spike up and down. So my goal for tonight's newsletter is just to get us prepared for where the best levels of support and resistance will be. And then in all reality, tomorrow we are going to really focus on what that reaction looks like. They're expecting just over 200,000 jobs being added into the U.S. economy tomorrow morning. If that number comes out higher than expected or lower than expected, that's where we're going to be really tuning into that reaction. So as always, you can come out and join us tomorrow in our live trade room, and we'll be watching that news come out in real time, and then of course digesting what the reaction to that news. It doesn't make much sense right now to really anticipate what it will be tomorrow. We have to be ready for whatever the market reads that news report as. So now that you know the plan for tomorrow, 8:30 tomorrow morning, be very careful leading into the report tomorrow. It'll be very, very thin. It'll be very unpredictable is the word. Usually somewhat flat ahead of that news report, and then once the news comes out, we're going to give it a few minutes, let it figure out what direction it wants to go in, and then we're going to use these levels of support and resistance to anticipate areas for trading opportunities. As always, like I say every time we have non-farm payrolls, if you've never traded a non-farm payroll report, tomorrow is a good day to watch or to practice in simulation. Make sure you've got somebody you're trading with who can kind of navigate through it with you, because it is, like I said before, it is the granddaddy of all the news that we get here pretty much around the world, right? I can't think of anything else that's more important right now to traders of all types. So let's start out this evening with the euro. The euro is bullish at the lows of the bull channel. We completed that measured move up to those channel highs. We talked about that in last night's newsletter. So buyers are looking for pullbacks as price continues to push higher off these channel lows, and sellers will be watching for support levels to fail, and they can sell into these buyers' stops. So as you can see here, we have this bull channel, nothing new here, been watching that all week. We had the measured move that pushed us higher today. We talked about that again last night. Nothing surprising there at all from last night's newsletter. Now we pull back into the low of this channel, and we know that the buyers are going to be gunning for that 1379, 1400 area on the euro. When we talk about the euro being affected by tomorrow's non-farm payrolls, if we get a much higher reading for the non-farm payrolls tomorrow, if we do exceed expectations dramatically, which it wouldn't be the first time in recent history that we completely blew the doors off of it. We saw it a few months ago. If that happens, you're going to see the dollar surge, and that will be a negative correlation with the euro. So a positive reading tomorrow for non-farms should be bearish here for this euro. Just keep that in mind. Obviously, on the opposite side, a negative reading will be very weak for the dollar, and of course, that negative kind of fundamental correlation will be pushing this euro higher. So above expectations for tomorrow, it's going to be bearish for the euro. Again, we'll have to wait and see what the reaction looks like, but the way the fundamentals work with it, though, a strong number tomorrow should be strong for our US dollar, which will be in turn negative or bearish on the euro. So play it carefully, wait for the reaction, but there should be a negative correlation to tomorrow's news report as it comes out in relationship to what they're already expecting, right? So they're expecting 221,000 for tomorrow's jobs report. So err on the side of caution ahead of this on the euro because it will be dramatically affected by this non-farm pay report. Bottom line is, though, bulls are clearly in control right now. You've got support levels. We're looking for buying opportunities at these support levels as we go lower. And this is where that being ready for anything tomorrow is really going to come in handy, because when the news comes out, it will get very volatile here tomorrow. And if we find ourselves pushed all the way down here and then we start making that move up, then you know you're ready to start buying those pullbacks, right? Basically returning back to that bullish trend. As you'll notice here, we get a measured move coming down, so that's going to make for some easy support here at the 1180 area. And then again, remember, if you're a bull right now, you're gunning for that high back at 1130, let's say 1379, 1380 area, just below that 1400. You've got a range high up here at 1470. Those are definitely within striking distance tomorrow if we get a very negative number, right, for that non-farm payroll number, because that will kill the dollar, push that thing lower. If we are a bear right now on the euro, your best bet here right now, if we get a really strong non-farm report tomorrow, your best bet is to look for buyers to fail, buyers to fail, buyers to fail, right, in this bullish trend before we turn to being bearish until we start making lower lows and lower highs. We know that we definitely want to be aware. Bullish trend, if you're a bull, you're buying pullbacks as soon as it starts rising. If you're a bear, you're waiting for the bulls to fail. That way you can basically sell into those buyers' stop losses, which of course are sell stops. Let's keep moving here. On the S&P, by far our most challenging market of the evening on this newsletter. The S&P is range bound with a definite bearish tone here this evening. Now, this is a market that looks like it's going into non-farm payrolls or FOMC. So really, there's really three ways of looking at this. There's three very, very important things we can see here. First of all, the long-term trend in this has been bullish, and we really have seen some great resilience here from the buyers every time we tried to poke our heads lower. Then, of course, you've got this trading range that we've been watching the past few days. It keeps on kind of poking its head down and gets smacked back up. But then we missed our mark at the highs. We didn't quite make it all the way up to that range high, and we come tumbling back down. Now we're getting a lower low here, and of course that's going to result in a short-term bearish channel. So as you can see here, anybody's game, anybody's ball game for tomorrow after non-farm payrolls. You have to think of this, though, as being really sideways ahead of this news report. Long-term bullish, short-term sideways with this little tiny tone, right? This little light tone of bearishness. The problem is, though, is that this lower low here, you'll notice, I said this earlier this week, it broke below this low, but it couldn't stay below that low, and that's the giveaway. The giveaway is even though there's this slight tone of bearishness here, we really have to call this a sideways range, which means in all reality, unless we see this market take off to the downside tomorrow, we really have to be a long-term bull. Doesn't mean you can't find some great selling opportunities in the short term, but what I do want you to remember, though, is tomorrow's non-farm payrolls. It's not going to be it's not going to be a simple reaction on the S&P. So again, if you've never traded the S&P, or if you've never traded non-farm payrolls before, tomorrow is not the day to begin doing it here on the S&P. We're talking about one of the most challenging markets in the world, and everyone is going to be positioning themselves both ahead of this news and after this news tomorrow. So sellers will look for opportunities at resistance levels overhead. You can see plenty of resistance areas overhead. If you're a bear right now, you definitely want to wait for that price to come up off those lows and look for that selling opportunity. Or, again, if we just take off the downside tomorrow, reading that reaction to the report tomorrow, we will be looking to sell those retracements on the way down, measured move support, extension support, and range expansion support. So I hate sounding indifferent right now, but we really have to get our finger on the pulse of this reaction tomorrow after that non-farm payroll report comes out. I always hate to say we'll see what happens, but literally the way this market looks right now, we really do have to see what happens tomorrow. And you're going to see about 10 minutes after that news report comes out tomorrow, you'll have a good idea, at least we will in our trade room, we'll have a good idea as far as what direction this market wants to go. And that's why I said the name of the game tonight, getting ready for tomorrow, is just be ready for all the levels above and below. Friday's non-farm payroll report tells us this market go in either direction, so be ready to watch that reaction tomorrow. Now, if you're a bear right now in the S&P, we go zooming in here, cut that previous chart time frame in half. Here's the S&P 4 anchor chart. We're definitely bearish in the short term. There's really no doubt about it. So if you're a bear right now in the S&P, these are going to be your selling opportunities areas overhead. I'll be erring on the side of caution tomorrow, waiting to see what this reaction really looks like. But bottom line is this chart just doesn't lie. It's definitely bearish. We know we have long-term bullish, but as of right now, unless something dramatic happens tomorrow when that news comes out, again, it will be highly susceptible to that news report tomorrow. Depending on how the reaction is, we have to err on the side of the bear side here in the short term. So we know that we've got sells up at resistance, selling opportunities up at resistance, and then again, if you're a bull right now, you have a chance to buy this low. And then again, as price is moving lower, if you're looking to be a buyer on the S&P tomorrow, your best bet is to wait for those sellers to try and then literally buy into their stop losses. Sellers to try and then buy, sellers to try and then buy. You're basically looking for seller failure to be a bull going with that long-term trend tomorrow. So whatever you do, if you're a bull, be careful. Don't buy into the resistance. Wait for the resistance levels to be tested, and then as you see them start to hold or fail, we'll know exactly what to be doing at that point. You get some targets here waiting for us, measured move, extension, and extension targets waiting for you guys to downside. So again, this chart, it's difficult to argue with. We're definitely bearish in the short term, so look for those selling opportunities at resistance areas. Only after, though, we get that reaction from tomorrow's non-farm payroll report on the S&P. Moving on here, from the S&P down to the gold. The GC, the yellow metal, gold's been easy for us here the last couple weeks. Definitely in a bearish environment right now. We have this long-term bear channel. We got a couple different measured move options here, AB to CD, AB to CD. So we definitely have a couple different options here as far as measured move support levels waiting for us to the downside. Really right now, though, bearish ahead of major news tomorrow morning. Sellers want to stay patient to sell resistance levels overhead, and buyers can look for those levels to fail, or they can look for a short covering rally on Friday. So really, once again, here's another one of those markets that will have a negative correlation to this news report tomorrow. What I mean by that is they're expecting about 200,000 jobs being added into the U.S. economy. If we get less than that, that'll be bullish for gold. If we get more than that, it'll be bearish for gold. This, of course, being a shelter market, right, has a negative correlation to that U.S. dollar. So we will be using that news report tomorrow morning at 8:30 to give us our overall guide, kind of the backbone of what should happen. But again, remember, it's all about the reaction. It doesn't really matter what the news report comes out and says. So we'll be watching the news tomorrow morning. We'll be watching closely that reaction. Unless it comes out dramatically higher or lower, you've got to be a bear right now on the gold. And again, looking to sell here at resistance levels overhead on the way down to measured move target, extension target, measured move, extension support targets, right? And of course, don't forget the low of that channel. Most important thing though is if it dramatically comes out lower than expected, you can pretty much bank on these resistance areas are going to break down and we'll make a run back for that 1200, back up to possibly range highs tomorrow. Gold is one of those markets that will be extremely volatile after that news report comes out tomorrow. So be very careful if you're trading the yellow metal here tomorrow. The hardest part is going to be if it just takes off to the downside. If it launches to the downside, you're probably not going to have a lot of time to really jump into it on a short trade. So if we find ourselves hanging out around here late in the morning, buyers, you will have an opportunity here, most likely for a short covering rally, but be very, very careful and only look for that towards the end of that morning tomorrow as we wrap up this first week of the month of June. So definitely have a bearish market on our hands right now on gold. Sellers look to sell at resistance. Be careful selling into support levels below. Buyers, you guys really have two different options. You can buy at these lows, counter trends, so obviously be careful with that, short covering rally as we push lower, or you can wait for what I think to be the best opportunity here would be wait for prices to test resistance levels, and just like I said on the S&P, wait for those buyers to fail, wait for those sellers to fail, and then you're literally buying right into those stop losses of those sellers, right? Which of course will be buy stops. That's my plan for gold tomorrow. Again, gold, another one of those markets that we're really gonna have to wait patiently and see what comes of this news tomorrow morning. Crude oil, bearish coming off the range highs. Sellers will wait for opportunities at resistance levels and buyers will look for short-term opportunities. You can see we're relatively oversold here right now. On our way back to resistance levels, buyers can look for some short-term opportunities. And again, just like I said on gold, if we take off to the downside, because we're so oversold like this, you're definitely going to see a late morning, early afternoon short covering rally tomorrow, and you may be able to pick that off a little bit at those lows. Just be careful though if you're looking for a short covering rally at the end of the day tomorrow, because it is counter trend and it's always a little bit difficult to figure out when that reversal is going to happen and get that profit taking off that low. As always, we'll be trading this market live in real time tomorrow morning in our trade room, so you're not alone out there trading crude, S&P, or any of these markets. So coming off these range highs, we know we got the easy sell off the highs earlier this week. That was relatively easy to see coming a mile away. We have a measured move support level down below. So if you're a buyer right now, that's where you really want to be looking for that return back to resistance to begin. Look for buying opportunities at 57.55. Again, you're talking about counter trend here. So if you're going to do it that way, you better get to those profit targets quickly, lock out that risk, and try to hold a runner. Don't get too greedy being a bull right now on crude oil. Best opportunities here to be a seller are going to be back at overhead resistance. And again, without knowing tomorrow's reaction to non-farm payrolls, we really have to stay open-minded here on the black gold, on the crude oil futures. So bears, you guys are in charge right now, but stay patient if you're a bear right now, waiting for either major resistance overhead, those red boxes and red lines to be tested so we can look for selling opportunities tomorrow after that news comes out. Be very careful trading any of these markets before that news comes out. And then again, if you're a bull, you have some short-term buying opportunities here, either at the measured move support at 55, right, 57.55, or if we just run tomorrow morning, look for a late morning move back higher as a short covering rally. The other option is, of course, waiting for resistance levels to be tested and then looking for a failure from the sellers. Pretty much the exact same scenario we talked about on the ES, on the gold. If you're in a bearish market and you want to be a buyer, look for areas where those sellers are going to try and fail. Just make sure you don't buy into resistance. Wait for the resistance level to be tested. Wait for those sellers to commit, and then you know where their stops are going to be. It's going to be right where you'd place your stops, and then wait for that stop to be triggered, and that's going to help get you right into the profit on that reversal, and then you've got targets waiting for you overhead here on crude. Guys and gals, I can't emphasize enough how important it is to be careful tomorrow if you're a brand new trader. Please don't forget, non-farm payroll report, 8:30 a.m. tomorrow morning. We'll be in our trade room at 8 a.m. getting ready and analyzing the reaction to that news report. As I always say, please remember, you are not alone out there in your trading career. I know you might be alone at your desk right now, but come join us as a new student in the community of traders here at School of Trade. If you head over here to SchoolOfTrade.com, you'll see we have a free trial here on the website. You can learn more about what it means to be a member, and you can learn a lot more on my free trial here than you will anywhere else on the web. I can guarantee you that. I'll also give you a free pass to come out and test drive our live trade room. We offer 3 levels of membership: beginner, intermediate, and advanced. And as always, I've got someone standing by here 24/7, 365 to answer all your questions. Guys and gals, we've had a fantastic first week of the month of June. I hope you learned a little bit with me. I hope you earned a little bit with me. And I hope you guys have a great Friday. Don't forget, come out and see me tomorrow morning. Part of our trade room, 8 a.m. tomorrow morning. We'll be trading all the markets we've been talking about here this evening. And as always, Monday through Thursday evening, I do my newsletter. So no newsletter for me tomorrow. They're letting me out of my cage tomorrow morning at the end of the morning. And I will see you guys back here for the next newsletter. It'll be next Monday evening, right around 8 p.m. Eastern Time. Guys, my name is Joseph, broadcasting live from our corporate headquarters in Los Angeles, California. Thank you so much for joining me. Thanks for being here. Thanks for being amazing people. Be well out there. Have a great weekend, and be nice to each other. I'll see you guys on Monday or tomorrow morning in our live trade room. Adios, amigos. Bye-bye for now.